Okay. Right, let's go back. Right, so I'm just clicking on the dashboard in the list of modules that we have. When clicking on the dashboard, you know, guys, that the dashboard is providing key performance indicators on your company. Of course, nothing happened with respect to revenues. We do have, yes, expenses, you see. You have a negative, of course, because a negative income, so it's a net loss, in other words, because there are no revenues yet that were recorded. And I would like to show to you, let's say, the key performance indicators. So these are account balances that you may have to pay attention to, and these are selective, related to the account receivable, related to the accounts payable, related also to some, let's say, bank account, etc. So you have all the necessary information real time, so to take the appropriate decision. So of course, the only thing that we have to be careful to in this is the checking bank account. It appears that it is negative. Of course, as I told you before, you will not be able to survive this way, right? So be careful on the bank overdraft every time you're paying. Okay, let's go back to I'm sorry, suppliers and expenses. And under suppliers and expenses, I'll go to the payments one more time. There is no invoice. There is no invoice to be paid, but I would like to check the invoices that I already paid. It means that the invoices, 2 invoices were already settled, were already paid, because we don't have any accounts payable, as you can see over there. I can click on find invoice, and when clicking on the find invoice, search for all the invoices that you have. You have 2 invoices. One is the software unlimited that has been already paid, and the second one is a Heart computer. Invoice number 397 is also paid. So if you select the first, you select the software unlimited. I would like to check the invoice. Okay, there is something of interest here. So when tracking the history of your invoices, are they paid or not? Of course, the balances are 0, but you can see that this invoice is paid. So you can see the stamp is paid. You can also check the other invoice, supplier invoice, find the invoice. The second invoice that we just created before the break, it was with the Heart computer. You select it, and of course, it's going to be stamped paid. Something else, guys, to let you know about is there any possibility when we pay for an invoice, we don't pay entirely for an invoice? It means that partially paid invoice. Yes, it's possible. And we will create a third invoice. We'll not be going through codes, orders, etc., but I will be just making an invoice directly. I will create an invoice on purpose. The invoice number 300. I think it's 300 and okay. So let's go for the sequence. Okay, let's say 380, invoice number 380. Select the supplier. Data International Corporation is the supplier. Data International Corporation, invoice number 380. The date, let's say it's March 2nd. March 2nd. Okay, there is no previous orders or codes, so we just purchased this directly from the supplier, so we didn't place any order. So the item that we purchased, let's say, was let's say A18. The quantity 1 is just one web server, and you accept the amount. The price is 2,575. And also you validate the early payment terms, 125, 21 days. Of course, when we created the Data International Corporation as a supplier, we entered these early payment terms because it appears that this early payment terms is fixed. Okay, so when dealing with the supplier, these early payment terms are always there. Okay, so we keep this 125% if paid within the first 21 days, net due in 60 days, we keep everything as is. And this is on March 2nd that we purchased, of course, the pay later. So, and you click on process, or as usual, you can report and display the transaction to see how it looks like, even though we're comfortable, but you can check it every time if you prefer, and you click on process. Okay, this is the journal number 7. Okay, it's G7. So you have an outstanding balance of 2,575. You have, of course, 21 days to take benefit from a discount. It's always possible that you partially pay. You see that partially payments. So if you go to payments, you can click on pay suppliers invoices. You select the Data International Corporation, this software, this supplier, I'm sorry. You have an outstanding and an only outstanding balance with the supplier coming from the invoice number 380. The due date, of course, is May 5th, as we're counting 60 days, which is the maturity date. Of course, you have to select the payment date. For example, you decided on March, let's say March 25th, okay? Let's say March 25th. To pay partially this invoice. You have $2,575 as amount owing or outstanding amount. So you go to the payment. Okay, if you click on the payment, so the software will be systematically offering the full amount. So if you're going to pay only 1,000, so just you click on the payment amount and you write 1,000. So this is a 1,000 as what a payment, which is a partial payment, in this case, partial payment. So, and of course you can see on the report how the journal entry will look like, you see. All right, it's 1,000 and you click on process. Of course, the same advisor will appear as you know, because we do have a negative, okay, a bank overdraft is the second or the third check that you're paying from your bank account. Of course, you don't have sufficient fund, and therefore the same advisor will appear to you, so showing that you don't have money. Are we willing to get some fundings in let's say in the coming few days from the customers? Of course, when you do have some accounts receivable that you have to collect from the customer, of course, you have to be careful on all of this. And of course, the payment has been made, is a partial payment. Look at the outstanding balance now. It's no more 2,000. It's just 1,575. It's the outstanding balance of, let's say, accounts payable. If you go to pay, okay, so if you, I'm sorry, let's go to the invoice, find the invoice first. Is this invoice that we're looking at is the transaction number 7. You see that you click on, you select it. Something here is clear to all of you guys that there is no paid, okay? No paid, because it's not fully paid. That's why it's not yet stamped as paid. But look at the amount. The amount is 2,575. This is the total of invoice. This is what the amount owing, showing the remaining amount that is not yet offset. So it's 1,575. In addition, you can check also with the payment. So look for the payment. So find the payment. Find the payment. Of course, you can search for all the payments, or you can select. You can customize your search, right? You can select that. Just I would like to see the payment made with Data International Corporation, the supplier that we're dealing with. You click on OK. So only one payment has been made to this supplier. I select this payment. And of course, we're here. You can proceed with another payment, right? So you can later on you proceed with another payment. So just to inform that we have just 1,000 paid for this supplier. Of course, if you will be continue working on the payment, so you click on the payment, pay supplier invoice, and you select your supplier, Data International Corporation. And you have here the amount owing, which is 1,575. Okay, so you can proceed with the rest, of course, in a later period. Okay. when using the payment, you can pay for something regular, let's say, like not necessarily the payment is used only when we're dealing with suppliers, because you see the module is titled suppliers and expenses. You see, suppliers and expenses. So you'll not be going to use this menu only for suppliers. Even if you do have some expenses to recognize or to pay, you can go to the suppliers and expenses and you pay from there. And the journal entry will be recorded from there using the linked account that we do have. So click on payments. Now you will not be selecting pay supplier invoices, but you can select pay expense or pay expenses. Okay, you check or you click on pay expenses. Now you're going to pay for something. We can call it miscellaneous payment. Miscellaneous payment, it's a payment of an expense in general, that's all. Okay, making the payment by check. Okay, by check. Okay, let's say by check, and you select the savings bank account. Okay, because we don't have funding there to pay from. All right, so no suppliers here are to be selected. Okay, no suppliers. Do not click on any supplier, but you can click on one-time supplier. Simple as that. One-time supplier is a general expense that you're paying, and you select the date to be March 5th. Oh, on March 6th. March 6th. Of course, here the check number is 1. Why? Because you select another bank account, you see? You can use cash to avoid, let's say, the numbering, cash. And what are you going to pay as an expense? You double click, you see, you have to select an account. What is the account here? So what kind of expenses you're paying? So you have to be selective here. Let's put 5740. What is it? Miscellaneous expenses. So it's general expenses. Okay, so I will let you know what does it mean. I select. This is the account that we are using when recording this payment of the expense. What are you going to pay here? You have to put in the description, guys, the description, what happened exactly. So you're paying for what? Let's money. You can click money for charity event. Okay, money for charity event. By putting this description in front of this account, it means on the ledger later on, when you have to edit the ledger or to print the ledger, you can find why this account has been debited for this amount. Imagine that the amount that we paid for this charity event represent $200, simple as that, $200. So by clicking on 200, you see that 200 in the amount, you find that the total amount is 200, and put the same comments that you put on the description, of course, to make an explanation about what happened in this transaction. It's so important. Money for charity event. Okay, and before that, you click on process and you record in the journal this transaction. You can display. And of course, you'll see that the expense is debited and the savings bank account that you selected is credited. So you click on process. And this is the journal number 9. Okay, so you can see, guys, I can use the payment not only to pay invoices, but you can pay also a lot of other things. Let's say a regular expense that you may imagine, like for example, the rent expense, the insurance expense, supplies expense. Of course, you can do this using the suppliers and expenses menu, and you go to the payments. Okay, and you click on pay expenses. Make sense?
Yes.
Okay. As usual, guys, every time I can ask you about where can I find this journal? Okay, so you can go to transaction details and click on all. If you'd like to see the corrections, you can select corrections as I earlier presented to you. Click on OK. You'll have the list of all the journal entries that we entered. Okay. Guys, I would like to ask you a question before that I proceed. How the software is able to determine the accounts that we are using to journalize, to debit and to credit? How the software can understand that we have to debit an asset, we have to credit a cash or a bank account? How the software is understanding when we have a discount that there is a contra expense or a contra revenue account or an expense account? How the software understand that this account must be used? How the software is so smart, you see, to detect this, you see, to detect what are the accounts to be used in the debit and credit. Any answer? I can help you.
Because it classifies them.
What do you mean by classifying them, Rami? What do you mean by classification? You see, I didn't get it honestly.
At the start, you told us that the program is split into 5 categories, like assets, liabilities, equity, revenues, and expenses.
Yes.
And maybe from there, the software can detect the necessary account that needs to be used.
Honestly, is no the software. I got the point. The software is not smart enough to detect which account to use. The software is, let's say, out of the existing number of accounts that we have in the chart of accounts, we have hundreds of accounts, or maybe thousands or millions of accounts that we're using in the software. How the software is so smart to detect this? Of course, you can remember, guys, what we call them the linked account. Remember the setup settings. And under the setup settings, we are in supplier and expenses, right? Go to linked account. Linked account. So now, guys, in the linked account, we are making all the necessary parameters so the software will detect in each transaction which account to use. For example, for the early payment purchase discount, you see, this is the account that we're using, early payment purchase discount. So we fill in it. So you are selecting this linked account there. Make sense? So the idea is, if your linked account are well established, of course you will not be facing any problem when using the software when recording transactions. Okay? So for example, if I would like to change this early payment terms discount to another account, like for example, let's say sales discount, and we can put it a contra revenue. Okay, so the software will understand also that we have to use this account, not the early payment purchase discount. Okay, so we can make all the necessary adjustments to the linked account there in this part. Make sense? So of course, this is true for all the other modules. Make sense in that? So the software will understand what are the accounts to be used based on what? Based on the linked account that we are setting on the setup settings. Okay, guys, let's stop, let's say, working on the suppliers and expenses, and we can move on to the clients and revenues. Clients and revenues. Okay, clients and revenues. For the client and revenues, like for the supplier and expenses, okay, we're going to talk about something approximately the same. You see, we presented here a purchase code. Now, we'll not be talking about the purchase code. We're talking about the perspective of the seller. And now we are selling, so the company will be treated as the seller. is the reversed analysis. So we don't have a purchase code, we don't have a sales code. When we have the sales code, when one of the customers is requesting, let's say, a pro forma invoice, if I am going to purchase from you a certain number of items and I would like them the next week, what are the list of prices that you're going to offer to us? And how long it takes for you for the shipment? And is it a free shipment or not? So you're asking for this pro forma invoice. So who's going to be making this code? Of course, it's going to be the company. I said the company because the company is treated as the seller now from the perspective of the seller. So we are in charge of issuing this sales code. Upon validation, we can move on to the order. It's going to be not a purchase order, but it's going to be sales order. Okay, the sales order, who's going to place the order? It's not the company. It's going to be
Customer.
the customer. Exact. Okay, and now if the customer is placing an order, we can ship the goods later on with the invoice. And now it's not going to be a purchase. Here is a purchase invoice. Now it's not going to be a purchase invoice, but it's going to be a sales invoice. Who prepares the invoice? Is the seller. Who's the seller? Is the company. Okay, and then you can proceed with what? We can proceed with the collection. It's not going to be payment, right? It's collection. Collection of what? Collection of money from the customer, right? And this collection is to be made by, or this payment, of course, is to be made by the customer. So the customer will proceed with the payment. And for the company, it's going to be collection. Okay, who's going to pay is the customer. Make sense? So it's approximately the opposite, but of course the perspective now is going to be reversed. But if we go to the client's revenue, I can't see any order and any code here. I see only invoice. I will talk about time slips later, but invoice, I can see receipts or collections, but I can't see the order and a code. Any chance that we make the software using this code and order for the clients? It reminds me what we talked about the last session in class. We were using, you remember, setup, settings. Just to remind you what happened. I click on setup settings and I go to company. Under company, you go to features. Okay, so company, so setup settings, company, and get back one more time. Set up settings. You go to company, under company, you go to features. And under features, you can select what? Orders for clients and codes for clients. These are the not yet found, but if I select them or check them, of course I will find them after just we click on OK. You see, guys, now it's clear. So we have the code, we have the order, we have the invoice, and we have the receipt. It's approximately the same thing that we discussed from the supplier's perspective. Now we're discussing it from the seller and the company's perspective. Okay, and we can enter the code. We can convert the code into an order. You can convert the order into an invoice, and of course the invoice, it could be collected and we can receive the money from the customer in the future, right? So we can do something approximately the same as what we did with these suppliers and expenses. Okay, I will not be wasting your time by creating a code, and the code will be converted into an order, therefore is going to be removed from the system, and you move to the order, you convert the order into an invoice, and the orders and the list of the orders of course will be removed, and then we pay for the invoice. Let's create the invoice directly. Okay, so I know that you don't have any problems now. Okay, so you can click on clients or invoices and client invoices, and you create an invoice. Okay, what is the invoice number? Guys, why the system is offering invoice number 1? علاش حط عليها 1? When we created an invoice earlier with the supplier حط لي blank. Why the system is providing 1 as this is the first invoice that we're issuing for the company? Because it's an internal document. This is a company document. So every time you do have a company document, so the sequence and the order will be provided. And this is what? To prohibit the fraud. Because guys, you know that if the sequence will not be respected, we can create fictitious invoices. And by creating fictitious invoices, what happened? We're going to overestimate our revenue. And we're going to end up with a net income that is higher than it should be. So we can cook the books this way. So the system, to make it secure, so the numbering of the invoices will be systematically provided by the system. And then if you would like to audit your invoices, you will find all the list of the invoices 1 and 2 and 3 and 4 and 5, etc. 1,000, 6,000, etc. So if you are missing an invoice, it means there is something wrong happened. So the sequence of the invoices should be respected. So every time you see company, it means what? It means that this is an internal, and the sequence of the numbering should be provided by the system. Okay? This is the invoice number 1. And imagine is March 7th. March 7th. There is no previous codes or orders, so just the customer is asking for this immediately. So you select the customer as Software Corporation is the third one in the list, Software Corporation. You see the contact person is Mario DeFranco that we entered in the list when we created the Software Corporation, a client. Okay. And for the item that has been sold, let's say we sold to this customer. You double click on the item, you select AAT. We sold to this customer 1 web server. You see, guys, the base price. You see the price here. If you click on the base price, you remember that we entered, let's say, a regular price, preferred price, and we don't have any web price. So you can select the price that you're dealing with this customer. That means that it could be possible that you select the preferred, but accept the regular, 3,200. By the way, guys, when we created this customer, apparently we offered to this customer 3% discount if paid within the first 45 days, net due in 60 days. Okay. Is it the only thing that we sold to this customer? No. You go to the second line in the table and you double click and you select A15. A15 is user's guide, right? And say that the quantity sold is 3 users guide, except of course the price appearing there, which is the regular price. Nice. So of course we select pay later because we don't have the early payment terms. That we have 3% if paid within 45 days, net due in 60 days. As we are familiar with, when we enter in transactions, you have always to go to the report, and under report, you can go to display revenue transaction details. We do have a lot of accounts there, a lot. What happened? Why all of these accounts are appearing? So guys, when selling, I will get back to this. When selling on credit, journal entry, I say sales on credit. How to record the transaction based on what we learn in accounting for the sales on credit. Which account should be debited, which account should be credited?
We should debit cash, credit.
Just tell me to fix the thing, it's on credit.
Accounts receivable, man.
Excellent. You debit account receivable. And you credit?
Sales revenue.
Excellent. You credit sales revenue. This should be for what? For the price that you're selling with, right? Is the selling price. And you know, guys, when you're selling on credit, we do have two systems. I don't know whether you still remember them. We have the periodic inventory system.
Perpetual.
And perpetual, exact. So if you're using the periodic, that's all. The only journal entry we represent the debit of the receivable, the credit of sales. But if you're using or applying the perpetual inventory system, you have to recognize at the same time the cost of goods sold. Okay, the cost of goods sold for what? For the cost of the inventory that you sold, right? For the cost. And you credit
Inventory.
the inventory account. Excellent. This is also for the cost. How many types of inventory we sold? 2, A15 and A18. Maybe we will find it 8 accounts to be used. هكا ولا normally باش تلقى account receivable for all of them. أما باش تلقى revenue of the first item, the revenue of the second. علاش we will find them separate? I will just go back to show this to you. Guys, when we created the list of account or the chart of account, we created a separate revenue account for each item. You remember this? 40/40 sales computer hardware, 40/30 sales computer or sales manuals, and 40/20 is the sales computer supplies. So every time you're selling an item, so you have to record it, and this is for organizational matter. So you have to see the revenue from each product, because if you do have many product lines, it is most preferable that we create a separate revenue account for each product line. Objective is simple. We would like to track, let's say, the profitability of each product line to see whether this product is profitable or is not profitable. صحيح, the overall, when we have to prepare the income statement, we will combine all of these revenues in a single revenue account. But if you would like to track the profitability of each segment, the profitability of each product line, it's much more interesting that you create separate revenue account, and that's exactly that we did. In addition, okay, so I don't like to discard this, because I would like to remind you something. حتى for the cost of goods sold, I created separate cost of goods sold account. كانت تفكروا كان account اسمه 50/20, 50/30, and 50/40. Okay, this is cost of goods sold computer supplies. This is cost of goods sold manual. This is cost of goods sold computer hardware. Okay, on purpose, because we would like to track the gross profit. The gross profit for each product line. The gross profit is simply the sales revenue minus the cost of goods sold, right? So the sales revenue of computer supplies, talk about A13, okay, minus the cost of goods sold of A13. So objective is that we get the gross profit of each product. And this is exactly what we're looking at, the gross profit per segment, per product line, per activity, etc. So this is, of course, by making use of the software. You don't have to worry about all of this, so you have to create the account that you prefer. If I go back to the report, display revenue transaction details, look, we have account receivable for 3,920 is coming from where? يا guys هو اللي بعتهم حاجتين. If I get back to the invoice, look at the total invoice. You see 3,290. This is what? The total amount from selling two items. A18 for 3,200 and A15 for 90. So the sum is 3,290. This is in a form of accounts receivable. If I click on display, I will find that it's the account receivable 3,290. Cost of goods sold. This is the cost of goods sold for manual. This is the cost of goods sold for computer hardware. And you see the revenue, I'm sorry, not the revenue, but the asset account, the inventory account is credited for the cost. This is manuals that is being credited for the cost, 74. And this is computer hardware that is credited also for the cost. And what happened here? We record the revenue separately. This is the revenue for manuals and this is the revenue for sales computer hardware. So you don't have to worry about all of this because the system will be providing this systematically to you. That's why exactly I told you that at the beginning we were making all the necessary parameters to the software prior to using the software when recording the day-to-day business transactions. So 5,939 is balanced. You see the total debits equals to total credits. So if we're making sure that everything is okay, we can click on process. We can write a message in the invoice to the customer, by the way. Thank you. Okay. Is this clear?
Yes.
Yes, sir.
Okay, nice, excellent. I click on process if no questions. This is the G10. Okay, and I close this. I get back to the software. Now, guys, I do have outstanding account receivable with the 3 customers. Software Corporation, it's a new invoice. Do you still remember the 4,000 and 2,000? These are what? Coming from the previous period, 2022, still in March. Still in March, you see, not yet received. Okay, are we going to collect this? Of course, you can go to the receipt and you can click on create receipt, right? You create a receipt. Imagine that we're going to collect this 4,000 from management consulting, the management consulting. You can click on create receipt. First thing, you select the customer that you're going to receive the money from, management consulting, and systematically you will have the outstanding balances of account receivable that do exist for this customer. I said I do have, you remember the invoice number A458. The invoice date, it was, let's say, November 1st, 2022, and we still have amount owing of 4,000. Okay, when exactly we received the money? Let's say it's March 9th. On March 9th. I select the date. This is the date of the transaction. Okay. How you get paid? Is it by check? Is it by cash? Is it by a transfer, a pre-authorized debt? You see the pre-authorized debt, it means that it is transfer from the bank account of the customer to your bank account. Okay, it means that virement, in other words, right? So click on check. Yeah, guys, the net check is blank. Why is blank? عليه ما تعطينيش the sequence because it's not my check. It's not my check. So this is the check number of the customer. So I don't have to provide anything here. So it's not an internal documentations that we have to keep track on. So it's a check number 700. Okay. And you click on amount received 4,000. Amount received 4,000. And you click on process. By the way, when you click on process, your checking bank account can fee overdraft. That's 7,000 something, okay? So I click on process, but before that I click on process, I can check the journal entry, okay, the report. Okay, go. This is it. I debit the bank account, which is the equivalent of cash, and I credit account receivable. Process. And yes. And successfully processed. Still, even though we received this 4,000, still the checking bank account is overdrawn. So if you close this and you go to the dashboard, صحيح ما عادش for 7,000 something, but it's 3,000 minus 3,983. You see that the dashboard, we're making some sales. Of course, the net income قاعد يتحسن, okay? So then it's still in the net loss, but we're just selling. So of course, the revenue will increase. Make sense? And go to clients revenues, client invoice, find an invoice, search for all the invoices. You see, guys, for the invoices that we have, you see in the list only the invoices that are belonging to this accounting period. Remember, guys, that you can look for the invoice only of this period, right? So invoices from the last period, you can find them when you have to create a receipt. Okay, if you have to create a receipt, for example, you go to action line, تلقى عنده invoice from November 25th that is still outstanding for 2,000, not yet received or not yet collected. So you can, of course, use this to collect the money. So you see the account receivable is now 0 for management consulting. Do you have any question, guys? Is it clear?
Yes, clear.
Okay. If you don't have any question, I do prefer that I stop today up to this level because we're going to enter into something that we call the credit memo. By the credit memo, it's something related to when we talk about sales, it could be possible that we talk about sales, returns and allowances, right? Sales, returns and allowances when the goods are getting back to you, okay? So how to record this? Of course, we know how to record this from financial accounting, but how can we make use of the software to record the sales, returns and allowance? We will discuss this the next time. So I do prefer that we stop up to this level. So I'll let you practice all what we learned today. And of course, if you have any question the next time meeting, you can ask me your questions, of course, with respect to all what we did. The next time meeting should not be, let's say, occurring. It could be after the midterm, okay, if I'm not mistaken. So you will have the midterm exam just the week after the